Good day, everyone. So I have with me here the daily chart for Euro USD. So, and as we can see, if we followed up on our last week weekly trade review, we can see that the price point that we called our buy side liquidity, that price has gotten to that place. So we called this out last week Saturday that we were expecting this buy side liquidity to be taken out. So today, during the London session, so we've seen that that point has been taken out. So now, that being established, that we have been looking for buys, we have been looking for buy trades because our draw on liquidity has been this BSL. So coming to a 1 minute time frame during the London section open. Yeah, that's 2 a.m. to 5 a.m. New York time. So let me just take this off so that we can see it clearly. Yes. So interval here, this is the time at which the London section opened. So and prior to that, price left a footprint which was a previous high. That's this buy side liquidity here. Yeah. So before the London section opened, we were watching this high here, and then we saw that before the section opened, price actually took out that liquidity before the section opened. Let me label that so that you guys can see it clearly. Yes. So this was around this was around 1:55 a.m. New York time. So price took out this buy side liquidity, and then as soon as the section opened, we saw price now give us a break of structure, like market structure shift from this point here. So from this point here, sometimes price will take out the liquidity when the market opens, like during the section, but there are sometimes it can take out the liquidity before the section opens. Then what will now happen is that the PDRA will now form inside of the section, just like what we have here, that it took out the liquidity before London section opened, but then the market structure shifts and then the PDRA now formed during the section which we have here. So as the London section opened, then we had a market structure shift. Then after that market structure shift, price formed an imbalance, a fair value gap here. So as soon as we saw this market structure shift, immediately this low was taken out. Then we our eyes was now fixed on this gap here, this gap here, you get. So we set our limits, we set our order, and immediately this candle entered into this imbalance here. Then there we have our short order. So then our target was this place, the nearest sell side liquidity. Because price always moves from internal range to external range liquidity, or external range liquidity to internal range liquidity, as we have already established in the previous videos. So how did we know that it is safe for us to target this sell side liquidity and not this particular one, not this particular one? Because if we look at the range, this buy side this previous high that was taken out before the session open, if we look at the range, we will see that that move actually started from this point. It actually started from this point. Yeah. So, and most of the time, once a BSL, a buy side liquidity is taken out, most of the time it targets, like, from that, the move of that high from that starting point. Most of the time the algorithm will not stop until it gets back to that sell side liquidity and also take out that liquidity, then before going where it wants to go. So the main range here is from this point to this point. So that's the range we are dealing with. That's the range we are dealing with. From this high here to this low, that's the range we are dealing with. So every other thing in between that range is just noise. Every other thing in between that range is just noise. So, and also this will also help us not to take trades out of impulsion, and that's where you see you keep taking losing trade, you keep taking losing trade till you just blow up your account. That's because in the first place you are taking those positions from the wrong position. So one thing we must learn to do, and obviously we can only get that kind of knowledge by experience. You get, one thing we must learn to do is to learn how to look for your setup at the right position. Like, we need to learn how to position ourselves. So those points that the bigger players are more likely to step into the market, those are the points that there are more volume, like there are more volume in the market. And those are the points that the bigger players, that's the people that actually move the market, those are the points that they are more likely to step into. So, and we can see that the sell side liquidity was taken out here. It was taken out here. So this sell side liquidity taken out, this sell side liquidity taken out, this sell side liquidity taken out, then our sell side liquidity, our main target, which was our draw, was also taken out. So from our entry here, from our entry, that's this fair value gap, to this sell side liquidity, every other thing there was just noise, you get. so that now we can see the amount of retracement that price did. It was almost as if it wanted to come back to our entry. But that's one thing we need to learn about the algorithm, is that one of it one of the things is that once you know where the algorithm is going to, then it gives you like somewhat more of like confidence. Yes, because um according to institutional order flow, we understand that, for example now, like these cells here now, this pullback is just them like trying to re-engineer more sell, so they will push the price upward again, you get, so that they can push it back down again. So all these pullbacks is just them trying to engineer more cells to keep it going to the direction where it is going to. And also, one of the way you know that then you are in line with what the algorithm is doing is that each of the PDRAs that form prior to where the liquidity was taken out. So after the liquidity is taken out, each of the PDRAs that form, price always respect. For example, look at immediately this buy side was taken out, the next PDRA, we have a fair value gap, and we also have an inversion fair value gap here. So we can see that the candle, this bearish candle that entered into this imbalance here, the body of the candle closed below the fair value gap. It's only the wick. Now remember that from our previous videos, we have established that the wicks of the candles, that's this point here, they are the ones that are permitted to do the damage, you get. So like here now, we can see that, this is a 1 minute. So within that 1 minute, this bearish candle that formed and entered into our PDRA, that's this fair value gap. Notice that from the open of the candle to the close of the candle, we see that the body of the candle closed below. The body of the candle closed below. Now only the wick is inside of the fair value gap. So that's like clean pure algorithmic delivery. Then notice again, after this we also have another block that formed again. Remember what I'm trying to explain, that when an institutional order flow starts, its price always respects those, like, see this, after this fair value gap formed, we have an order block that formed again, and notice how price fell to this point, retraced to this point, and immediately it got to this order block here. Just notice how the bodies of the candle, each of them stop at that point and then began to sell down again. And then after that order block again, price formed. Look, this the three bearish candle that formed and pushed price away from that order block. Notice that it formed a fair value gap again, and notice that the moment price sold from that point, then began to resell again back to that point. The moment it entered into that fair value gap, notice how all the candles just got to that point, stop at that point, and notice this massive bearish candle that formed immediately. So this this bullish candle entered the PDRA, then the next candle that formed after it was a bearish candle, not just a bearish candle, but a gigantic one in the 1 minute time frame. So all these signatures, they are this like all these signatures is telling us that the algorithm is trying to do somewhere. Like they are just it's telling us that, okay, the algorithm is saying that I'm heading somewhere, you get. So, and whatever forms in the way, whatever forms in the way are just like noise. So we can see that immediately the algorithm achieved what it was looking for, it tapped into this sell side liquidity. Immediately it shifts away back to the upside, taking out and disrespecting all these previous PRAs that formed, even taking out these previous BSL that formed right before London section. So that's telling us that the algorithm has achieved what it wants to do in this case. So same way in the opposite way, if the algorithm now, let's say for example now, from this point now, from this entry now, the algorithm is seeking this sell side liquidity now, and you are looking for buys, maybe you misinterpreted price. Even though, okay, for example now, even though, okay, let me use this other block, because this one here, because this is the last candle that formed before this series of bullish candles. So you might be looking at this other block now and saying, okay, you are waiting for price to come to this point so that you will buy, but it's going to disrespect that other block, even though it's a PDRA. You get, the most important things are not the PDRAs. The most important thing here in price action is to know where the liquidity is and to know what the algorithm is doing, to know your buyers and to know the draw on liquidity. The most important thing is the draw on liquidity, because if the draw on liquidity is wrong, so the algorithm is going to one direction and you are going to another direction, even though PDRAs form and you want to use those PDRAs, you will see that the algorithm is going to disrespect those PDRAs. Why? Because because the most important thing is the draw liquidity. So the PDRAs are only valid when they are in line with the draw liquidity. So that is why from the beginning of this video and from our previous videos, we have already established our facts from the higher time frame. So, and we may also ask, why is it that I did not come today and start looking for sales? Because I've already done my analysis on the higher time frame, the weekly, the daily, and the 4 hours, and we have already established that fact that pending from from where price was at to our draw liquidity, we'll only be looking for buys to be on the safer side. It's not that we cannot catch sell positions, but they are short term, you get, and we can easily fall into a losing trade. So to avoid those scrappy trades, we will just stick to our draw on liquidity. So now, me coming to a 1 minute time frame now, I'm not confused, because any, if you like, let price form, let any signature, even if I see a setup forming which is a short, I will most likely ignore it, because that can be a fake out. You get, most especially these lower time frames, like this 1 minute time frame, you can be deceived a lot. Yes, for example, so many times you can see price take out liquidity. It will even give you a break of structure, that's market structure shift, you get. And most of the time the market structure shifts can be massive. In turtle soup, that's indicating that okay, the bigger players are stepping into the market. And so if it's a buy side liquidity that was taken out, then we see a market structure shift, and then the candle that breaks the low back down into the previous candle that took out that high is massive. Let's say from the up of the candle then to the break of the candle that was inside of the range. If it's just a single candle, that is massive. They wonder that okay, so, but sometimes it can still disrespect that. Yeah. So those things are because the draw liquidity is wrong. So So yeah, so remember from this point again, yes. So let me take off all these points so that this chart will not look messy, so that we can understand better. It will be more clear. Yes. So our sell side liquidity taken out. Then our sell side liquidity taken out. So now notice something else again. Now, just like I was explaining before, you notice that immediately this sell side liquidity was taken out. Look at the move from that low to our main target. You can see that it is massive, like the movement. You get like this short we had here, and then these buys we had here. If you look at the difference, like you will know that this market is more out for buys than for sales. So immediately this sell side liquidity was taken out, then notice we had a shift of structure again to the upside. So that's a break of structure. And then after the break of structure, look at this fair value gap that was formed. So once you see this fair value gap formed, then you can place your limits or you take your entry. Now look at this candle that dipped into the fair value gap, and then notice that the body of the candle closed above of the fair value gap, then only the wick of the candle was actually inside of the fair value gap. So after that, then we see buys to the upside, and then taking out our main draw on liquidity, which is this high here on the daily time frame. Yeah. So that's it for Euro USD. For 2 weeks now, we have been calling this out. So the moment price took out this order block on the daily time frame, then our draw on liquidity, we mark this out, was this buy side liquidity. And so from this point now to this point now, it took 2 weeks for this setup to actually play out completely. And so today now, our buy side liquidity has been taken out. So for now, we'll just wait to see what price will do next. Is it going to give us a shift from this point to target these lows, or is it going to continue going to the upside? So for now, we'll just do nothing. Remember, it's not good to chase price. We allow price to show us what it wants to do. So as this previous day high, sorry, not previous day, as this buy side liquidity now has been taken out, now we'll have to wait and see what price wants to do next. Is it going to give us something like a shift, or is going to continue going to the upside? So for now, Euro USD is going to be on a pause, and for this week, now we might be looking more on gold and Nasdaq. So that's it till next week.